Hello, everybody. Welcome to the Money live stream. And a lot of things to go over, so let's just jump right in. So first of all, I think unless you haven't looked at your portfolio today, you're probably doing pretty good. And it's one of those great days. These are the days that I actually like to come on and talk about the markets because everybody's in a good mood. Why are they in a good mood? Well, it's because numbers go up. And that is fantastic. And this was just today that we saw that Bitcoin broke out above 50K. Now, I'm sure everybody knows this, but just so you know, that people will take profits and they will continue to do that across time frames. So even though we go up to 50K and it would just seem like, well, why wouldn't they just hold the 60K or 100K or 300K or whatever the new price prediction is? It's because there's people out there that will still take profits. Now we preach on that here, but I mean, it's whatever you want to do. So today is a great day. We actually went up to, I think the top was 50,255, as it says here. But of course, as time goes on, people have their limit orders in, they have their sell orders in. And once it hits that magical 50K number, then there's a sell-off. And that usually happens in the big price points. Now, I'm not here to predict every different sell point that's out there, but it is a great day. And it got me thinking today about this, which is pretty much the whole reason why we're here, which is I think we're way ahead of schedule. And there's a couple of reasons why we're ahead of schedule and why I think we're really going to crush it in this bull run. I think it may be pretty astronomical. And I hate saying that because it goes against everything that I'm trying to do, which is calm people down and not get crazy. But there's some good evidence out there. Anyhow, so we actually talked about this 9 months ago. 9 months ago. I said, hey, there's something going on because we're way ahead of schedule in, of course, the Bitcoin cycles. And we took a look at it. I took a look at, in the 4-year cycles, of course, there's always the halving. Then we have an all-time high, then a dip and a reset, and it just repeats and repeats and repeats. And I took a look at the different halving years, 2012, 2016, and 2020. And I said, just this last one, on 14th of February, 2020, we were at $10,000. And of course, then in March or so, we got the cerveza sickness and it dropped off a cliff. And you could discount that, but it is what it was what it was. But then as we went into the halving, which is around May or so, we were around $10,000 again, which was 50% of the all-time high of the previous cycle, which when in 2017, we had around 20K. Okay, let's just keep it round. It was 19,770, something like that. No big deal. So we were at 50%. And we took a look at 2016, and we were even less than that. And of course, we looked at 2012, which is kind of wacky numbers because it was the first one. But today, I mean, if we take a look at it, 50K of where we're at, and we're not even at the halving. Even if we plateaued, I don't think we're going to plateau. Half of where we were at, $67,000. That's roughly $33,500. That's where roughly we should be, or lower than that, going into the halving, and we're not. We're at 50K, and we've been fluctuating with nowhere near 33K, down to 47.8, actually 44, 45K, somewhere around there. So again, I think it's just, we're massively ahead of schedule. And that's just pretty much how it is. Again, this was a video that we took a look at 9 months ago. And then just last Sunday, not this Sunday, but the Sunday before last, we talked about lump sum and going in a little bit more, a little bit more so instead of dollar cost averaging. The reason I talked about that was because, again, we were talking about things are just ahead of schedule. Things could have gone terribly wrong in that assessment. We could have dropped 60% or 80% or went to zero, which it's like I have to say that, even though I think it's the most ridiculous thing. But, I talked about it for a couple reasons. One, I thought, these ETFs are gobbling up everything. We're going to take a look at, there was a video that Anthony Pompliano was on. And he's made some pretty good points in a minute and a half. And we'll take a look at those ETFs and just how it's just essentially eating up the Bitcoin world. And then, of course, we'll take a look at a little bit of macro and, of course, the jobs and M2 money supply. And of course, the traditional markets. We take a look at the S&P 500, which we will in a second. It's everything just kind of lining up right now. So it would probably not be too bad for me. I don't know what you're going to do. I'm not a financial advisor. But to do a little lump sum action. And there's a couple reasons. First, because I said if you do that before the halving, you're doing pretty good. And you still got time if you want to do that. Like the halving should be around April 20th. Correct me in the comment section. And then, when we're talking about this, for the lump sum is also another reason why I set it. And one of those big reasons is because if you lump sum now instead of dollar cost averaging, that's not what I'm telling you to do, I'm saying what I do, is that you avoid these things called capital gains. Because here's what I worry about. On this channel, we talk about taking profits. If you believe in taking profits at some point along your journey because you're like, hey, I need a kidney, or hey, I have massive credit card debt, or hey, I'd like to fill in the blank, whatever else it is. So in that situation, you probably want to sell your crypto along the way, and that could be Bitcoin, or that could be altcoins, whatever else it is. If you do that before 1 year's time in America, I don't know where you're at, but like, for example, in Germany, if you do this less than a year, you have short-term capital gains. If you sell after a year in Germany, as I understand it, there are no capital gains. In America, if you sell after a year, these are the capital gains rates that you actually have. We're on a progressive tax scale, right? So for here, the most you're going to pay, depending on what state you're at, 20%. Got it? If you do this and sell your crypto at some point within a less than a year, it's whatever bracket you're at. You could be at 54% or whatever it is. You could be at 34% plus the state tax, which would mean that you would have to pay 50%. So the reason why I was talking about this last time, these lump sum videos, was just because I'm like, hey, there's problems afoot and these things could happen and nobody talks about taxes. I mean, very rarely on the crypto channels, but it's something that you have to be aware of if you want to be a successful investor. So there's that option, of course. And then also you can also do what I do up above my enormous head. I Trust Capital, where I have everything in a, not everything. I have a Roth IRA, which now that I'm older, I get to actually put into $7,500, and there are no capital gains on that, even if I trade within the account. If you want to take a look at that, links in the description. Remember, there is a limit to that, and that is coming up on April 15th if you want to do those things for the fiscal year of 2023. Anyhow, again, I think that we're ahead of schedule. I think there's some big plays to be had, and this is from my man Dan Gambardello at Crypto Recruiter, but CCV. Great guy, great channel. Can't say enough good things about him. There's a link in the description for his X account, which he's got a lot of great information. But he says this: every time since 2013, Bitcoin has closed a monthly candle above the bull market doors. Bitcoin has broken all-time highs within 1 to 3 months. Let me say that again. If it breaks out above the bull market doors, we hit an all-time high within 1 to 3 months. What's an all-time high? That's $67,000 for Bitcoin. Can you imagine what your alts are going to do? They're going to go crazy. Because remember, it's great that Bitcoin is doing this, but what comes next? It's alts. And that's just pretty much how it happens. People put money into Bitcoin. As it goes up, they take a little bit of profits. They stick it into alts, high cap or large cap. Then they take profits in that and put it in a small cap. And they just keep recycling and recycling. So if you think Bitcoin's going great, it is. Watch out for alts. Anyhow, breaking the doors this cycle means Bitcoin closing above $57,000, which is not an easy thing to do, but we've been doing pretty good. This has always occurred after the Bitcoin halving. Again, always occurred after Bitcoin halving. And you can see that at the end of the year. But imagine if it actually happens before April 20th of this year and we close above 57K. That would mean that March would be a heck of a month, and we'll see. So it leads you to think about this. Well, if we're doing good, how is the other markets doing in the macro world? Well, S&P 500 just broke its all-time high. S&P 500, which is buoyed by the Magnificent Seven, essentially the NVIDIAs, the Facebooks of the world's, Amazons. It's 7 huge, large stocks that do fine, which I'm not here to debate anything about that. I'm just saying that if we take a look at the max of the S&P 500, we're at an all-time high for that, which means that's why we have a lot of that overflow from traditional finance getting into our market, which I have no problems with. I have a big tent. You guys can come in and do whatever kind of buying that you want. And of course, you're going to dump, but that's just up to you. And then we take a look at the M2 money supply. This is from Ben's website and the Cryptoverse. I didn't realize this, but the M2 money supply, of course, savings deposits, money market securities, and time deposits such as CDs and everything else in between, we can see that actually we had started to print a little bit more. This is October 2023. We went up to 4.12. Then in December, 20.865 trillion, I should say. And then, of course, I don't have any data for January, but I'm just guessing maybe we print a little bit, and that always helps with the liquidity in the markets. Stanley Druckenmiller said it very easily. He says, it's not about everything that's going on in the P&L and the different things and documents that you look up for companies. It actually just takes a look at liquidity and what the Federal Reserve is doing. If you follow the Fed and see what liquidity is happening, you can pretty much figure out what's happening in the markets. So I like that. And now the coup de grace, what's actually been going on. This was a pretty good piece from the Pomp, Anthony Pompliano. And he was on CNBC again. And he said it pretty poignantly about why this is happening and just how much traditional markets are in love, essentially, with Bitcoin. So take a listen to this. This is about 45 seconds to a minute. And we'll come back and we'll finish up, because I think really it comes down to the in and outflows of exchanges, which I'm going to show you some on-chain data in a second. So take a listen. Oops.
Now we've come back to buying. Yeah. I mean, look, the verdict's in, right? Wall Street doesn't just like Bitcoin. They love Bitcoin. If you think of these assets, there's been over 5,500 ETF launches in history. Never have we had a fund get to $3 billion in AUM in the first 30 days. BlackRock and Fidelity both just did it. So two for the first time in history. And then if you look at Bitwise and 21 Shares, ARK, they're both going to hit $1 billion this year or this week. And so now you have 4 funds that are going to hit $1 billion of inflows. But the most interesting part of this is the inflows. These funds are doing $500 million a day of net inflows, but there's only 900 Bitcoin that is actually coming into the daily incoming supply. And so when you look at that, that's like $40 to $45 million. There's 12.5x more demand for Bitcoin than what's being produced on a daily basis.
So how much of this do you think is being generated by the ETFs themselves?
Well, I mean, you just measure the actual net inflows, right? And so you can just see there is way more buying pressure.
So you're saying $3 billion for BlackRock.
There's $4 billion now for BlackRock, 3.5 for Fidelity. And then you've got Bitwise and 21 Shares will both hit about $1 billion this upcoming week.
Crazy. So, there's, of course, when we talk about this, we always would say that, when the ETFs do get approved, we're going to see some fireworks. And I thought, yeah, sure, I think we'll, at some point, but I did not expect it to be this quick and this fast. I thought it would take a couple months, quite honestly, for everybody to kind of pile in, but it looks like the message has been received loud and clear. Also, I think there was some fantastic marketing done by BlackRock and Fidelity and these institutions to get to their high value clients to go, look, you need to get on this now before the halving comes in, because there is a specific narrative and we're going to pump everybody's bags. That's just speculation, but that's what we're good at here. So again, very interesting stuff from what Palm says. Great little piece. And I will just add this. Great website in the block. It's all about flows, right? Inflow, outflow, about what's happening as far as the different exchanges. Great website. I have a link. I don't have an affiliate link for it, but just intheblock.com. And we can take a look at the inflow volumes. This is the total amount in dollars or tokens entering exchanges, deposit wallets. All exchange refers to all support exchanges. And we're just taking a look at Bitcoin itself, not about any kind of altcoins or anything else. And we can just see that over a 30-day change, we had a negative 70%. Negative 70% of inflow volume going into exchanges. Now, there is also one thing to be said, which is, Coinbase, they are the custody provider of most of those ETFs. So I'm not for sure exactly how that works, unless that's a separate entity. I believe it actually is, as far as a corporation goes. So I'm not for sure that it actually would say that for inflows or outflows. But I don't really care about this stuff. Inflow transaction count. It's all like good stuff. You can take a look at it. What I care about is this. I care about total flows. Total flows is the sum of the amount entering the exchange plus the amount leaving an exchange. This is an indicator of overall exchange activity. Aggregated exchange refers to all supported exchanges out there. So in black, we can see the price, which 46,000. And I will just warn you that right here, it only goes to February 11th. If I'm not mistaken, it's February 12th today. So we don't have data for that. But you're going to see how, yes, moving backwards in time, the aggregated exchanges, how much they have on there, it has fluctuated quite a bit. But we had a little peak here, 3-4 days ago, and it seems to just drop off precipitously. Not to say that it's not the lowest point, but I would be very interested to see how much it is at the COB or close of business today for February 12th, because it looks like a lot of this assets or Bitcoin is being taken off. And lastly, I will just say one last piece, which is under the quick view, as far as with Bitcoin, there's one big piece. And the biggest piece is this. Holders making money at current price. Did you know at this current price, 94% are actually in the money? And if we can take a look at just who is holding, over 80% of those people are actually holding Bitcoin and not selling. What does that mean? If you got a lot of demand, you know, a lot of sellers, what usually happens? I think you know the answer to that. And then lastly, just to finish up, people aren't selling. If we take a look at the Bitcoin average transaction fee link in the description, we can see also that transaction fees were actually quite high in December. Look at this, $37. Now, ordinals do play a part very well. I can understand that. Either people aren't using ordinals or people aren't selling or a combination of both. We're going to see how it's been quite a little drop off, a little bit of a peak here. Say this in, this was the beginning of February. But as we can see, as time has gone on, we are really low as far as transaction fees to a low of $4.18, which is how it should be, in my personal opinion. And I'm very happy with that. And of course, if we take a look at the biggest gas hog out there, Ethereum reclaims its rightful crown as being the highest fees out there for a layer one solution. And that's it for today. So look, again, I think we're way ahead of schedule. I think if you're here at this point and you've been dollar cost averaging or lump summing or whatever you're doing, I think you did a great job. And now it really comes down to, do you want to at some point sell? What are your price points and what is your plan? If you don't have a plan, it's okay. There's a link in the description for where I talk about selling 80% of my crypto, and you can check that out. It's there in every single video from there, and go from, and take it from that piece. But that's it for today. So look, if you like today's video, give it a thumbs up. Consider subscribing. Everything we talk about is time sensitive, especially moving into the halving.